I think the gold setup here is beautiful. And you and I have been talking like this for about 2.5, 3 years now. And I've been very guarded on the price of gold. I've never talked new highs ever. I've never said 2,500 this or 5,000 that. We are saying, as a result of what happened now, October 7th, that you are going to see a new all-time high in gold next year, which is new for us because we've been pretty pragmatic on the price of gold, and just saying it's going to take some time. But now,
The recent resurgence of gold, surpassing the $2,000 per ounce mark, has reignited optimism among industry experts. John Feneck of Feneck Consulting sees further potential for gold to rise, emphasizing a newfound positive outlook. Despite a brief slip below $2,040, the gold price has retained most of its weekly gains, prompting cautious optimism among investors. Technical analysis points to a potential resistance near the $2,052 area, a multi-month peak. Gold price accelerated the momentum towards challenging the all-time high, around the $2,079 to $2,080 zone touched in May. Factors contributing to this bullish sentiment include the current market setup and the time required for certain events to unfold. According to Feneck, the impact of the March financial crisis, the stability of gold above $1,900 for 5 consecutive months, and recent geopolitical events, such as the situation in Israel on October 7th, have played pivotal roles in shaping the precious metals market. Gold's surge above $2,000 is attributed to concerns over conflicts in the Middle East, which have overshadowed the impact of rising bond yields. Feneck, traditionally cautious, now predicts a new all-time high for gold in the coming year, driven by market dynamics and unfolding events. Turning to silver, the industrial demand for the metal experienced a setback in 2020 due to the COVID-19 pandemic. However, in 2021, this segment rebounded by 8%, followed by an additional 5% growth in 2022. Projections from the Silver Institute suggest a further 4% rise in industrial demand for 2023. Feneck expresses frustration with silver's recent trading behavior, resembling that of an industrial metal. Despite this, there is optimism about silver returning to its status as a precious metal in the coming years. Before diving into John Feneck's insightful interview, subscribe to our channel and give this video a big thumbs up.
well, we talked on your show after the March financial crisis this year that gold had a new floor put in on it, right? You and I interviewed just before that at VRIC, and we were talking about the 1800 level holding, which was actually correct there. Then in March, when we talked about the financial crisis adding a new floor to gold, and you saw gold take off to almost an all-time high, right? And so that is very bullish. Then you saw that period of time from the spring to the summertime where we had about 5 months where the gold price never dipped below 1900 in consecutive days, which I gets lost on a lot of investors. I think that's never happened before in history. So there's a lot of interesting price action that's happened this year, Charlotte. And now since we last interviewed, I think our interview last time was around October 1st, and we had October 7th with what happened in Israel, right? So like that's another floor now on gold with a lot of other investors coming in and saying, wow, I never knew that was even on the table, right? I never knew that international relations were this poor in certain parts of the world. And so, I think the gold setup here is beautiful. And you and I have been talking like this for about 2.5, 3 years now. And I've been very guarded on the price of gold. I've never talked new highs ever. I've never said 2,500 this or 5,000 that. We are saying, as a result of what happened now, October 7th, that you are going to see a new all-time high in gold next year, which is new for us because we've been pretty pragmatic on the price of gold, and just saying it's going to take some time. But now, if it wasn't for, Bitcoin doing so well, AI doing so well, tech doing so well in general, you'd have an all-time high probably already in our view, but it'll just happen next year. That's fine with us. We get more time to build positions. And so we don't mind that. I think, the setup looks beautiful if you look at a long-term chart of gold over 15 or 20 years. I would just tell people to hang in there. And if you don't need to do a tax loss sale, don't do it. I mean, I think in our sector right now, in gold and silver in particular, we got more interested in gold and silver stocks as a result of what happened October 7th. And silver has been very frustrating because it has, over the last, 2 calendar years, traded more like an industrial metal. Well, what happens if it starts trading more like a precious metal next year or the year after? I think that's very possible. And so we want to buy stuff that is completely thrown out the window here because we do think that silver is moving higher. We're trading at $23.50 an ounce silver right now. Gold's just under 2,000. When you divide that gold ounce of 2,000, let's call it, by 23.50, you come up with about an 85 gold silver ratio as we sit here right now. Every time you get close to 90, going back to the 1980s, silver looks pretty attractive as an investment. So we're not buying silver right now. We're buying silver equities. We've talked about a few on your show before, but names that either have news, like Silver Tiger just came out with some news on their PEA, looked really good. They've got 7 analysts as a junior stock, right? So what happens in a good silver market to that stock? Well, it's not going to be at 11.5 cents anymore because you've got 7 powerful analysts that are going to start writing up a stock like that. Most juniors have 1 analyst, maybe 2, right? Maybe none. So it's a really interesting story. We're looking for names like that right now that we can kind of sift through the rubble and pick and, hold on to a better time.
According to industry expert John Feneck, this geopolitical backdrop adds a layer of rationale for investors to seek refuge in precious metals. After weeks of relative underperformance, the shine in the bullion market has returned triumphantly, coinciding with the first shots fired in Israel. Since then, the trajectory of gold prices has predominantly been upward, with the crisis deepening daily. Despite the ongoing turmoil, experts express bullish sentiments regarding the prospects of precious metals. Investors actively weigh their preferences between gold and silver, strategically positioning themselves to capitalize on the unfolding crisis. Feneck underscores the importance of focusing on outsized gains in gold stocks, steering away from being satisfied with smaller percentage moves. In line with this approach, the West Africa-focused gold miner, Robex Resources, recently reported a noteworthy surge in gold production. In Q3 2023, the company achieved a production milestone of 13,375 ounces, marking a substantial 20% increase compared to the 11,124 ounces produced in the same period last year. This surge is attributed to a significant rise in processed tons, reflecting the company's ability to leverage the potential increase in gold prices. Let's get back to the interview.
Yeah, the geopolitical piece for us is important. And so that just added to the reason why you should own physical gold and or gold-related investments. As I've said on your show before, for gold to go from 1900 to 2000 is great, like it just did, right? But that's a 5% move. We're not interested in 5% moves in what we do. We're interested in outsized gains in gold stocks that will have leverage to a move in the price of gold, right? So there's many that we've talked about on your show before, but, for us right now, just real quick, Cartier had a really good news piece this week, ECRFF, which we've mentioned on your show at least twice. What I like, since we last talked, we should bring this up. Marathon Gold and Caliber did a deal, right? The Marathon Gold deal, I owned a very small piece of Marathon, but, if you're a Marathon bigger shareholder, you probably weren't happy with that deal. And so we're looking for gold companies, silver companies, nickel companies, et cetera, that are not looking to sell right now. We're really not interested in a takeover kind of thing because these prices are ridiculous. I don't want to see a 30% premium on a ridiculous price. I want to see, the ability for a leader to lead through this time and get to the other side. And this isn't a knock on Marathon. I don't know the inner workings there. I'm just saying that Philippe at Cartier wants to get to the other side, and he has a plan to get there. When you look at his insider ownership, it's heavy. He's got a group of investors that own about 8 to 10% that are just high net worth. He has Agnico, which owns 15.5%. He's got O3 Mining, which owns about 15%. So when you add just that up, it's about 40% of the entire float, right? So that, just to educate your listeners, is going to block a hostile takeover, right? Because they're not going to sell for what the price is now. And they're not going to sell for a 25% premium either, I don't think. So that's interesting for us. We want to build in names like that have a plan, have, some people on their side that see that this gold price is going to break out soon. And we're not going to sell for a lower price, right? I think that's important to know.
And the effect that that's had on sentiment in the market. So I wanted to ask you to expand those thoughts and tell me what you see going on there.
Yeah, so we were saying on your show last year that CPI was running real hot, and we have said multiple times on your show and others that the Fed means business, and until we get close to a 2% mandate, they are not going to back down. And now, at the 3% level, they're getting very close, right? So like that to us was meaningful on November 14th, where the CPI read came in 0.1% lower than expected, but at the same time, it's lower, right? And that trend the previous month was up. So, I mean, seeing a drop like this, the market loved it. And not just gold and silver, it was the broad market that really loved it. So I think November 14th changed some things for us, because right after that, the Fed futures meeting, like the CME, a website that I've given your listeners before, it basically just said that the 20 to 25% probability of a 25 basis point hike in December and January, both almost immediately went to like 5 to 7%. So you're seeing a very low chance of a hike now in December, very low chance in January. And then in March, what's interesting to me is that now there's a 30% chance of a cut. So you have a 30% chance of a 25 basis point cut on March 13th or whatever the day that falls on. And that's really bullish, because if you remember the last time we interviewed, only all of the 19 people on the Fed had said no cuts in 2023. That's not wonderful if you're a gold and silver investor, because you want that, acquiesce move from the Fed, and we're not getting it. We're seeing, them be consistently guarded and hawkish most of the year. So now the tables may be turned as early as March, I'd say easily by Q2. And we're trying to invest ahead of that, because when that comes, you're going to get another flow of money, I think, into the mining stocks.
Some analysts have said that gold could be overstretched, as a March rate hike could be overly optimistic. Many economists expect that the economy will only be soft enough for a rate hike at the end of the second quarter. In light of varying opinions on the timing of a potential rate hike, could the uncertainty surrounding the economy and the divergence in expectations impact the resilience of gold as an asset, leaving investors to navigate a complex landscape of economic indicators and policy decisions? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.